again, I am not recommending anybody do this, but personally speaking, I just feel like I can't own enough of that thing, man.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots. And I am joined, as always, by the brain trust himself, Mr. Chase Taylor. Okay, as is often the case, we'll come in here while we're waiting to get going. We get started on a topic, and then we have to stop it. So I want to jump right into what we were discussing. But why don't we go down the tape? Interesting tape today. Give us a rundown, would you?
Yeah, so S&P closed down 0.64, NASDAQ 100 down 0.59, small caps down 0.77, equal weight down 0.33, Mag 7 down 1.04, ex-US was up 0.36, oil another down day, but a little off the lows, down 2.2% at $57, so pretty cheap. Gold was up 3%, silver up 1%. Dollar down 0.24, and then on rates you had the 2-year up about 1-2 basis points, and the 10-year up about 4 basis points.
You have some and they've come in fairly short order. And to be fair, I think the market's done a similar thing. But those are some really big moves in gold in a very short period of time. I mean, you get up over 2%, that's a big move.
Yeah, 100%.
3% in a single day, and that was after it got smacked for I want to say 3% last week at one point in a single day. I don't know what, if anything, that pretends to. What was there any type of news or story out there today justifying that? I didn't see any.
Nope. I think gold's vol has definitely expanded in the last few weeks. It's kind of funny as equity vol has kind of compressed back in. Feels like gold vol has expanded, but same with FX volatility with all the Asian currencies going nuts the last couple of days, which is interesting to see just gold do this while you have the Asian FX surge as well. So I don't know, but no, I didn't see any specific thing that seemed like it should have made gold go up today.
Yeah. Now what we were talking about, and again, you guys should know this by now, but nothing we ever say is a recommendation as far as timing goes. I don't know. I think that there are a lot of potential things that could impact this stock. Probably more the narrative or the theme around it. I'm not nearly as worried fundamentally, but just going back to Google. I know that you and I see it similarly. It was funny because I had Jamie. I wanted Jamie to give me. Jamie's our junior analyst, and I wanted him to give me a breakdown, detailed breakdown about different parts of their earnings that I wanted some key metrics for him to pull out for me. And his first comment to me, it was this morning as I was driving in the office, and his first comment to me is like, I've never actually done work on Google. And he goes, I really like this thing. And I go, yeah.
Welcome to the club.
Good God. And he's like, this thing is so cheap. And I was like, yeah. The fascinating part about it, and I do think that this is proof, kind of an indicator to give you how just stupid this market has become. My words, not yours. But Waymo, you're hearing more and more about it. And I don't think people are paying enough attention. In one single year, last year, they did 50,000 rides. 12 months later, they're at 250,000, and they're expanding fast. I think the stock has a nonsensical valuation, but I would think it would be fair to say, and I think it's really hard. If you're a Tesla bull at this valuation, 50 to 60% of the current market cap has to be based on full self-driving. It'd have to be.
I don't know.
I
don't know how you explain it.
Yeah, well, you can't, right? And people buy Tesla for all kinds of irrational reasons. But when you think about the opportunity in front of, And just so you guys know too, it's a story of market share. Waymo has 100% at this point. Now they won't be the only one, but this is something that feels like it is going to have massive first mover advantages, right? The first one to get a beachhead, and that's them. And I don't think that there's one. They don't have a close second. Doesn't mean they won't get disrupted, but you and I were talking about look at Uber and X out compensation cost to drivers. Probably low. I mean, yeah, it's just mind blowing.
Which makes you think about Uber as well as a future. This goes from kind of a rough business as far as trying to sustain high profit margins to being, I don't know, one that might start making sense.
Yeah,
especially if those two keep working together at scale.
And is Uber working with Waymo?
You can hail Waymos via Uber, yeah.
That's smart. That was smart by.
Which, speaking of, like, I just the basics on this, like, I don't think very many people know. Like, I'll tell my dad about this. And now my dad, he's 82 years old, so like, it's not shocking that he wouldn't know this. But when I explained to him that you can just on your phone use an app to get a car to come pick you up without a driver, and it'll just take you where you tell it to take you, his mind was blown. He had no idea that was already a thing.
No kidding.
And it's not just him. Like, I've talked to people in their 30s that should know like more and about this kind of thing, and they're like, "Wait, you can do what?"
Yeah,
because it's only in a couple cities, and as of now, so I don't think people really recognize that this is a thing yet. So when it starts hitting your every town,
I know
when it's in Minneapolis all of a sudden, and people in the Midwest are like, "You could do what?"
The thing that I can't understand though is how investors in Wall Street are missing this. Like another part with Google, people are like, "Oh, Meg, guys, go look at it. Go look at the math." Okay, so look at YouTube and Netflix. They're spitting out almost exactly the same level of revenue. I think I want to say Netflix was at 40 and Google was at or YouTube was at 38.9 mil for the quarter, close, yeah. Right? But there's a big difference between the two, guys. First of all, YouTube Premium is growing consistently as a percentage of the total. So they're kind of getting the best of both worlds. But one has a zero cost of content creation. One does not. Okay. Netflix, here's the other thing. And I don't think that this is debatable. Okay. I think in the consumer's minds broadly, YouTube, for instance, if I had to pick between YouTube or Netflix, it's not even close. I'm taking YouTube every time. Why? Because Netflix can't tell me how to use a coat hanger to unlock my car, right? Among other things, right? How to fix my kitchen sink. But then but like we said, you look at those revenue numbers, and then you look at the market cap assigned to Netflix, and you're like, okay, I think it is a much better asset that I would own. I think it should be valued at a premium to Netflix, but I think Netflix valuation doesn't make any sense either. So anyway, just say, okay, so YouTube's worth $500 billion, which I don't think that that's a ridiculous assertion at all.
No, I think I've seen people with kind of that 400, 500 number on it.
Yeah, I think that. Well, I think if Netflix is significantly overvalued at 500, I think YouTube's much more appropriately valued at that level. Then you throw Waymo in there, okay? And remember, I think I think within 2 to 3 years, the combination of those two, if they were IPO'd and trading on their own, I think they could be worth, in 2 to 3 years, I think they could be worth Google's total current market cap right now. Both of them combined. I think that they could both easily pull $1 trillion valuation. 2 to 3
within
years.
A couple years?
Within 2 to 3. Well, I'm just saying, look at if
Waymo would have to grow real fast.
Okay, but what multiple is the market going to put on them when you look at that revenue growth? I mean, in this environment, now I'm not saying it would make sense. I'm not saying it would be a good value there.
But would it be shocking? No, yeah.
No. And then we haven't even talked about the chips business. We haven't talked about the Droid platform. We haven't talked about advertising. We haven't talked about search. We haven't talked about any of that stuff. And I'll just, man, I'm literally, and you're helping me you're helping me in this effort. And our other guys are too, but you know, again, I am not recommending anybody do this, but personally speaking, I just feel like I can't own enough of that thing, man. It's shocking to me that more people aren't. I mean, you know what I mean? Like, just that's a loaded safe.
So I think the key is going to be for them to get the cost down, because they are still, it costs a lot to get these cars equipped to do what they're doing. So I think the market may end up wanting to see them. Now you would expect you start making all the components that go into the cars to make them self-driving, more standardized. Maybe make the OEMs eat some of the cost. If you want to be our partner, that's fine, but you got to eat some of our cost of integrating all the hardware. You can get that down, then I think that's where you get, because right now, like, they're losing a bunch of money in Waymo.
Yeah. Well, I know Wall Street doesn't care about that.
Man, I mean, that's a feature, not a bug, right?
Yeah. Well, no, and look, I mean, just that's going to happen, right? Over time, the cost of that stuff's going to come down. And it's the other thing too, to me, is I wonder what the maintenance schedule on those things is like. I got to imagine, are they using those primarily on EVs right now? Do you know?
I don't think so, but I'm not 100% sure.
I mean, if I was in charge of that project, well, I don't know. What would you? You know what? No, I'd probably be using as the most fuel efficient ICE cars I can find.
Just plug-in hybrid, maybe, whatever.
Yeah, just as long as you felt confident you weren't going to get stuck having to replace the battery. Anyway, you can put this stuff in a spreadsheet really quick and figure out the most optimal way to.
So the Jaguar I-Pace is
that's the number one Waymo car, I believe.
And apparently they're replacing a bunch with Chrysler Pacifica minivans.
Those are interesting. Those are gangster.
Oh wait,
rides,
hold on.
Man. That's a gangster whip right there.
Oh no, sorry, I read that backwards. It replaced the Pacifica. My first thought was like, that makes sense. You get more people into it.
That's Waymo's first misstep right there. And once you move away from the Chrysler Pacifica, your days are numbered. So
they're going to go to that Hyundai Ioniq 5, and I think those are in fact EVs. So
we might be supplying them with the speakers for those cars.
Nice.
Yeah, the speaker company. We're talking to. I think I can say that. Yeah, it's not public. Yeah, we're not public. It's not. Anyway, it's among several others. For the EVs, our offerings are really, really. We're going to be in a bunch of EVs, and the reason for it is there's all kinds of engineering issues with EVs that you do not have with regular cars. Not issues, you can figure it out, but it's just different ways you've got to put things together. So believe it or not, the Tesla guy was talking about how much trouble they've had with doors, and how the minute they put a speaker in a door, it gets worse and it has all these other issues. So they like ours because they need less speakers, right? We've got better coverage, more range. And then we can do speakers of different shapes, right? That other companies can't, which allows them flexibility where in the car they want to put it, right?
Yeah, so it's a big design feature. Yep.
Yeah. And there's just all these kinds of really weird, like I said, they're not huge, just different. You start talking to these guys and there's just completely different hurdles that you've got to clear in the design side on the EVs. No, but yeah, that thing is a cash cow. The other thing is you still have, now Waymo was one of those, but you still have, I can't remember what they call it. What do they call it? Their home run sleeve, or the
Google's like internal almost
PE
like
fund,
venture fund,
VC fund, yeah. And the other thing is a lot of the detractors that talk about it being broken up, like they talk about Google Ads or search as if it's just going to get neutron bombed and it's just going to just vaporize and go away. And you're like, no, that's not. They're going to spin it off. My guess would be that if the government ever broke them up or mandated that they got rid of, let's say, Google Ads, my suspicion is that the way that they would do that is they'd IPO it, right? Roll it out into its own. You know what I mean?
Right. Yep. Just get its own independent board and do something with the share structure where you firewalled it or whatever, and then it would go public too.
I actually think that you could make a big argument when I've said this before, but I mean, I do, especially at current levels. I think that, and I'm not saying that I want them to do this as a Google long, but I think if you broke them up and IPO'd out the original parts, I think that alone would make us a ton of money.
And to me, like, I don't know, it'd be nice to pick and choose which parts I want and which parts I don't anyway. So.
That's true. I didn't really think about that.
Yeah, like there's a lot of businesses I wish they would just break them up so I could ignore the parts I don't like and
for sure
and buy the parts I do.
For sure. What are some other ones?
That just made me think of Sibanye Stillwater, the Platinum Group miner that started getting involved in a bunch of like clean energy stuff and like battery metals and stuff like that. No. Like, I'm just here for the platinum and palladium. Like I'd rather you stop playing around with the other stuff.
Yeah.
Now they have the gold, which is nice because that helps them, deal with some platinum drawdowns and stuff. But it's one of those companies that tries to be like everything to everyone. It's like a conglomerate that it just has collected all kinds. It's like a Christmas tree from some really old person that has Christmas ornaments from every year since they were a kid. And it's like, what is this tree?
Yeah.
That's basically Sibanye Stillwater.
It reminds me of, I'd say the opposite of that. And I think you see businesses do this way too often, right? And there's a fine line between innovation and branching out and growing, right? But staying true to who you are, that authenticity. I was reading an article the other day about In-N-Out Burger, and I feel like they are like the poster child of this, right? Doing it, in my opinion, the right way. Stick to your knitting.
Yeah.
Right. And get continually better at that knitting, but stick to it. And another interesting thing, it was funny because McDonald's ran some kind of ad. I don't think they referenced In-N-Out Burger directly, but talking about their competition, and In-N-Out referenced, they were like, oh yeah, that's funny. Did you also know that the average manager of an In-N-Out store makes $180,000 a year, where a general manager for McDonald's makes 70? I was pretty impressed. And then I sat there and thought, you know what? I'm not surprised. I walk into those places. They are like clock factories. They're all well run. They're all clean. They're all well managed. Makes sense. Anyway.
Yeah. Store managers for businesses that are run well make a fortune. Les Schwab's famous for that because he just empowered that manager of each individual store, gave them a bunch of upside and buy-in, like real upside in how in that store's performance. And that was a huge part of their success.
Yeah.
Walmart, interestingly now, if you run the whole Walmart store,
you make a bank.
Serious money. Yeah.
Yeah. Costco does the same thing.
No, you'd have to pay me serious money to run a Walmart. But
oh man. Yeah.
That's a stressful job.
Oh, I can't imagine.
Yeah.
At Costco, being a general manager of a Costco store would be a nightmare too.
Yeah. Just the supply chain part of it just has to be crazy.
Oh, I
choreographing like a really intense dance just to get inventory in and out and on the shelves on time.
I bet you the general manager doesn't do that at stores like that anymore.
I mean, I'm sure plenty of it's automated and AI and everything, but like you still gotta get it on the shelves and schedule your workforce around that. And
yeah, I think dealing with the workforce and scheduling that kind of stuff, just working in a restaurant. Like I remember having to watch the assistant managers and everything work on, working out people's schedules. It just looked like a nightmare. Right. I mean, managing people and working in retail simultaneously.
Right.
Shoot me in the head.
Yeah. No, thank you.
No good. Okay. So little bit of a reroute there. What else did what else you see today? Rates were pretty calm.
I mean, at one point the back end was up a little higher and the 10-year yield is back kind of above an important line. It's been kind of oscillating above and below like key area. You're back above it. I don't know what to think about all this Asian FX strength as of now. I'm kind of withholding judgment and see how this goes forward and what stories come out. But, theoretically, you could get into a situation where people either have to buy treasuries or have to sell them in order to square some books. So we might start seeing more volatility in the treasury space just because of, what's going on with that. But
what's going on?
Speculative.
Yeah. What's the latest news on tariff mania?
So yeah, it's starting to sound not so short term. When it comes to China, like no imminent, talks between key leadership or anything like that. And we were talking about this morning in the meeting, like to me, with our market doing well, the incentive for us to be gung ho about it small. And I think it's the same way for China. Like China's going to get their best deal if our markets are putting pressure on us to give them a good deal. So the way I see it, the best time to actually be optimistic about the U.S. and China coming to a pretty decent, like at least ceasefire, would be actually when the markets are doing poorly, not when they're doing well. Which you talked about a ton last week. The bidding against yourself. You push it up too high, and then you remove all that incentive to push deal. Japan's clearly driving a pretty hard bargain. We have that 25% tariff on just cars and steel, and like that's not even up for negotiation. And their kind of take is like, well, it needs to be. And so far, it seems like we've rebuffed that. So I would say that those talks aren't going that well, and that was supposed to be one of the easy ones, the early wins that we would put up on the board. I haven't heard too much about India or Korea lately, but there was, 2 weeks ago, there was a bunch of optimism on those getting done very soon. So granted, the Koreans said, hey, after our new government is fully on, in office and everything. So that kind of has a natural, hold on a minute date to it. But Bill Ackman today, who you could argue came up with the 90-day plan to sideline the reciprocal tariffs for 90 days, is now talking about how we should do 180. So I was like, well, at some point, like, what are we even talking about if you're just going to say it? If you're just going to delay them forever? Like,
yeah,
I don't really understand the point of this. I understand it for Bill because he needs his equities to go up, but I don't understand it for anyone else.
Well, speaking of Google, I actually have a good opinion of Bill.
Makes one of us.
Okay, well,
my beef with him is he's just a very extremely online person, and those people rub me the wrong way.
I just think he's done a lot of.
Anyone that has 40 paragraphs on Twitter for anything that's in the news bothers me. That's all. And that's that guy. I don't know how he's getting work done.
No. Listen, I didn't say. Look, he can come across very erudite and unneedingly. This is kind of unneedingly esoteric, which is sort of like redundant, right? But you know what I mean? Like, I get that. At the same time, he does strike me as a guy that will stick to his guns, despite like, you can make any argument you want to about the Herbalife deal that he got involved in. I never really understood his point, meaning, I think that generally speaking, those are horrible businesses that I wouldn't want to own. And generally speaking, if you gave me the chance to short a multi-level marketing company, I'd probably take it at some point. So I understand why you don't like it. Never really understood the fraudulent angle, because I was always like, dude, if people want to be a part of it, that's not fraud, right? You're not misrepresenting something. You're not offering people $120,000 salaries and then rug pulling them. You know what I'm saying?
Yes.
But and the way he stuck with that trade, because he promised those people that were wronged by it. Anyway, I don't know the guy, so I'm just purely speculating. But he does seem to have some pull and some draw with the administration.
Yeah. I think that's fair, and I think there was a stretch early on where it just seemed like he was like yelling into the ether on Twitter. I'm like, well, who is he talking to? But then you see like the policy thing. I'm like, oh, well, maybe he's talking to the president. Never mind.
Yeah, maybe he's gotten near. And look, I don't. Now, if we were to go, let me ask you this question. Don't you think that he's pretty sensible when it comes to, you may not agree with all of his takes, right? But in terms of like, if Bill was handling, if Trump was going to do, let's say Trump was going to follow the Ackman plan. Okay. I would have a fairly high level of confidence that Ackman would put together a sensible plan. Like, I think he's an intellectually credible investor. Maybe I just like him extra because he's really long Google.
I don't know if I remember his positions well enough to give a great answer there. But he was right that a 90-day pause on the reciprocal tariffs was absolutely the thing to do, because those were, not very well constructed. So, and even the 180-day pause, like, unless you're going to do like, 2-page documents, you're not going to get deals done in 3 months, like with enough countries. Like that's just not how trade deals work. unless it's just not a trade deal. It's more of a like, you change these 3 things and we'll change these 2 things and let's just call it a day for now. Which, I mean, I don't have a problem with that. But other than that, you need more than 90 days. So to the point of going 180, if the argument is like you need more time, then I'm fine with that.
The thing that I was looking at some different pictures of ports this weekend. I ran into a Twitter stream where they bunch of pictures of ports. I think the thing that is getting just incredibly little ink that no one's talking about is this isn't, like we were saying last week, this isn't about something bad might happen. You see those pictures of those ports?
Oh yeah.
It's nuts. It is nuts. And to watch the market and so many people in this, they're just ignoring it. And it's shocking. Like there's no way. Now, look, it can get undone. And if it got undone real quick, the market would have the ability to look through it. And we all know, right? But
which we're largely pricing at this point.
Yeah. But I mean, that's 100% that's what you're pricing in. There's no other way to explain it. You're sporting significantly higher multiples than you were pre-COVID. Way higher, like 50% higher. With interest rates where they're at, government trying to pull in on spending. As you mentioned, though, the Pentagon bill was pretty sporty.
Not really doing that, yeah.
Pretty sporty.
Turns out.
Anyway, have you heard about something I would like to talk to, and probably something we'll talk about offline, but I would like to look into somebody that knows. There's a lot of really interesting subtext around the missing $1 trillion or this money that has been missing off the balance sheet of the United States government. And I was listening to some things. Now, I don't know if they're credible. It's kind of one of the reasons I want to poke around at it. I guess that apparently this is not the only bit of money that's missing. That there have been several other big chunks of money over the years that have gone unaccounted for. And obviously that's, talk about fertile ground for speculation and conspiracy theories.
Well, yeah.
But that's sound pretty fascinating to me. It caught my attention. What do we have coming up this week by way of data?
Honestly, yeah, really just the Fed Wednesday. None of the data the rest of the week is that important. We had ISM services today, which was, it's not great, but it definitely beat expectations by a healthy amount. So services still holding in decent, at least for ISM. But yeah, Wednesday we have the Fed. Obviously, they're not going to cut. So really it becomes about the language and the presser.
Well, that was another thing that I thought was really funny, right? Like an almost euphoric market response to the quote unquote strong jobs report.
Yeah. It just takes the Fed right back off the table.
And
and people got really excited at the end of last week because 2 different Fed people basically said like, hey, look, if jobs turns over, yeah, we'll cut. And everyone's like, oh, they're cutting. And it's like, well, they said if jobs are bad, and then you get the jobs report and it's solid. And it's like, well, no, they're not cutting, guys. Now, obviously, if the next jobs report is a bloodbath, like they'll cut in June, but June, you're basically at June at the earliest, and I would say, you might even have to say that at the moment September really should be the odds-on favorite for any potential first cut. And just a week ago, I think you had 4 cuts priced. So when you got 4 cuts priced, and the next thing you know, you're kind of like, September is probably the first one. Well, that's month 9. Like you're not getting 4 if that's the case, unless obviously you do a couple 50s, which is, clearly given the backdrop is very possible. But you're getting to the point where if you're going to go that way, it has to be chunky cuts, if not emergency cuts at that, And I think for the Fed, that really comes down to that. Like, and you're kind of in a race between inflation going up because of tariffs and jobs breaking because of tariffs. Like, and how the Fed, reacts to that, who wins the race. And then, so even the timing of that, if inflation hits before jobs break, then that's going to make them so much less likely to cut early, and vice versa. So that's going to be kind of interesting to watch.
Do we have, speaking of which, while we're on here, we've got, I believe Palantir announced after the close today.
Yeah, they refer to AI demand as voracious, because they like to use words that way.
Oh, they're down 6% now.
And they raised full year guidance, I believe, too. I wonder what in the world they would have said to have to have done that to themselves.
Well, I mean, I don't know, something along the lines of, hey, our stock's trading at over 100 times
that
revenue.
Is definitely not what would have done it.
No, if they would have just talked about their valuation, the stock would have doubled in after hours.
Ford pulled their guidance for the rest of the year, which is not particularly surprising, of course.
No.
Palantir lifts full year guidance. CEO Karp cites tectonic shift in AI adoption. They really like using the spicy language.
Yeah, it's curious.
Voracious, tectonic.
Yeah. Well, hey, tectonic's a wonderful word here. Don't start stepping on that word, man. Come on now. Yeah, we've talked enough about Palantir. I was
surprised to see it down. Very surprised. Whenever they use the word voracious, like, oh, that's up 10%.
That is so funny. That's one of the things too that whenever this cycle does end, because issues like that, like these, will only get dealt with in bear markets. But something else we've talked about, the way that we announce and the way that we measure quarterly results for companies has to change. Man, this is what in the world does it matter? Why does it matter if you've got these accounting principles that everybody's supposed to adopt, right? And everybody's supposed to go by, but nobody reports in them. All of them are their self-contrived adjusted earnings. Like if you're about cleaning up Wall Street, if you're about getting noise and nonsense and manipulation out of,
who is about that though?
I mean, every politician that gets elected, supposedly.
I mean, I think this administration has definitely taken a step back in that way, like pulling all the guardrails off crypto, things like that.
Well, that to me is I see it. I mean, I see that as different, in my opinion. I mean, look, if people want to light money on fire in crypto,
sure, but like, to a point, I see what you're saying, but to treat it like it's not a security and the fraud capacity inside of it, the money laundering capacity inside of it's extensive. So pulling those guardrails makes it that much easier to do that stuff. Which lighting your own money on fire, and it's one thing, but to launder money or to rip unsuspecting people off, like, different. And then they've definitely made that easier.
Yeah, I'm not. I think crypto's a tough one. Look, there's no. I've been repeatedly clear on this, right? Like, so much of these, when you look at the amount of coins that are being launched every single week, it's ungodly. I feel pretty confident you can say 98 to 99% of those issues are completely worthless and are probably just out and out pump and dump schemes. Okay, overwhelmingly. That being said, the libertarian part of me just sits there and goes, look, man, a fool and his money were lucky enough to get together in the first place. And I do think that there are some really, I think some very important innovations and technological advances have come out of that space, are going to come out of that space. I think blockchain is really incredible. And I think to me, it's kind of a bummer that, in a way, to me, it sort of feels like the craze around crypto assets has kind of taken the shine off the part of it that I was the most interested, which was blockchain, right? And the potential uses of that.
Right. Which is still, it is actually getting its fingers deep into everything that's happening behind the scenes. But kind of like whenever it became a big deal, it was just obvious, like, oh, this is gonna be big and it will be inside the system.
Yep.
But in a way that, this isn't that visible.
Yeah.
And I think that has happened.
Yeah.
It has rolled out that way. We use it for all kinds of things.
Another one that's interesting, and we'll wrap this up, but another one's interesting. Apple, the weakness we've seen on Apple all of a sudden is really, really telling, or could be telling. I don't know.
Yeah.
But it starts to feel like, now again, it's just one day, but we kept seeing more of this, and I've bashed this market enough. You're just seeing signs. It's not happening quick, but you're seeing signs of fundamental analysis starting to show up a little bit. What seems to be, I mean, you've still got plenty of places where you're left banging your head against a wall. But I don't know. What are you seeing any of that, Nick? Or am I just
a little bit,
hopeful?
like to your point earlier, and like we talked about last week, like, it is a cliche, but it might actually be coming true a little bit. And that is, hey, maybe this actually is a bit of a stock picker's market. I mean, obviously to me, like Apple should struggle, and to see it actually struggle since earnings, to see them be punished for the China issues, for, you know, having to move supply chains away from China more, to see the, you know, the slowdown in things like the services, you know, revenue, like it feels like it's getting punished for the right reasons at the moment.
When you're sporting, and I was having a conversation with Jamie about this. That was part of what we discussed on the drive in this morning, and I referenced that because the part of that earnings call to me, if I was an Apple long, that would concern me the most is services.
In the one bright spot, I mean,
that's their growth. Cook said that.
Yep.
Like that's how they're going to grow going forward. You got a 33 multiple hung on the thing. Okay, when services starts to falter, okay, they are losing phone market share every year. Okay, now I don't see any indication that's going to stop. Right? You look over Southeast Asia. You know, Jamie was talking about that recent trip he took to Thailand. He goes, "You see Huawei phone stores all over the place," because I didn't see a single Apple store. Right? Yeah, I'd be very concerned if I was an Apple long here. I don't see anything propping up that valuation at all.
And the Huawei Apple thing, to me, it's a direct parallel to like the Tesla BYD. It's the same thing. Like,
it's a really good point.
They're gonna get their lunch completely eaten by BYD. BYD's just flat out better.
Huawei's better. Their phone's better. They make a better phone.
Making better stuff for cheaper, more profitably. Like you name it.
Yep.
And I think we're also, like, especially in the AI space, but I think more broadly, we're seeing this trend where, like, the more open things are doing the best, and the more closed loop, like tightly held stuff is starting to struggle. If you think about the App Store with Apple, like they held that so tight for so long, and like they really try to keep competition out of there. Like if it's something that competes with them, they try to put some guardrails on it.
That's been their innovation, man.
And that's
like,
short-sighted.
Yes. Yeah. And this goes into the conversation we were having about Apple. One of the reasons I have zero confidence in their management, look at all of their quote unquote innovation has all been about trapping their consumers on their platform. People, Yeah. And you're just like,
which works great for
a short period of time,
for a few years. Like, yeah, you'll maximize your revenue for the next 3 years, but 20 years from now, somebody will just let the Wild West be on their platform, and people are like, "This is great! Look at all these awesome apps." And you're gonna look at your iPhone. I'm like, I don't have any of that. You know?
Yeah.
But eventually, it catches up to you.
Yeah. No, I like. Again, I just don't. And I think Apple just got voted like for the 13th consecutive year or something, like the most admired company or something like that. The bloom is off that rose, man. I don't get it. I wouldn't do it with somebody else's money. Not when you look at some of the other stuff that's out there. All right, man. Well, I guess that kind of does it for today. We will remain on Tariff Watch as always. If you want to catch the video, which, you know, I guess people like to watch videos. I'm more of an audio guy myself, but anyway,
people will throw it on YouTube and then just listen though. So,
oh really?
So it works both ways. That's another reason YouTube's hot. Like a lot of people get their podcasts. I think more people are doing podcasts through YouTube than Spotify.
Yeah,
which is kind of wild. Like,
yeah, well, I mean, talk about another Google comp there.
There you go.
Right?
Like,
no, just I mean,
sells itself. Guys.
Go look at it. Go. No, seriously, go look at Spotify. There's another one that's a complete head scratcher. Right. Anyway.
And by the way, our producer was head nodding, so we know it's true that what I just said.
Yeah, the fearless millennial. If he's that's what we should be doing.
He knows where the podcast goes.
100%. Yep, he's Mr. Podcast. Anyway, all right, but yeah, you can catch our stuff on YouTube. Just YouTube search for Know Your Risk Podcast. Catch us on Instagram, on TikTok. My kids think it's hilarious that we've got content on TikTok now. Said, hey, it's for the kids, man.
It's on InstaFace. It's everywhere.
Yeah, InstaFace. That's right. Anyway, all right, you guys have a good evening. We'll see you tomorrow for another edition of the Daily Dots. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskradio.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.